Hello. We just have two microphones. I think on the stage, I don't think you need. Yeah, then you put it on. But we only have two microphones, so it's going to be a little bit tricky. Yeah, we can pass. Two more. Ladies and gentlemen, thank you for being here. I'm Robert Jarvis, working at the Ministry of Finance in Luxembourg. No? You can't hear me? Hello? Like this? Much better. Okay, so really close. Ladies and gentlemen, thank you all for being here. I'm Robert Jarvis, working at the Ministry of Finance of Luxembourg, and I'm here to moderate and host today's session. Today is Finance Day at COP29. But before we get started, a few administrative things. This show is going to last for 1 hour, not an hour and a half. So just 1 hour, and then there's a cocktail later, not here, but in the city centre that some of us will go to. Another trick I've learned for the ones that haven't been here yet, you have to switch on the headphones and hold the button for a few seconds before it actually switches on. That happened to me as well in the first few days. We're facing the greatest challenge of our time, the greatest challenge of our lives, of people's lives, but also our planet's life. We know how much the climate is affecting biodiversity, climate, nature. But one of the most resonating quotes I heard in the last few days here was that the Earth does not belong to humans. Humans belong to Earth. But our human lives are changing. We're being affected, disproportionately the vulnerable. And another one of the most memorable parts of this COP so far for myself has been a few minutes ago when, if you look around our pavilion, there's a few cards hanging up there. And those are cards written by students, children, so 8, 9, 10-year-olds. So those are letters to the climate negotiators. And they're really touching, sad, but also kind of reflective of where we are and where the kids are thinking. So I encourage you all to have a look around at the letters that children are sending us. What can we do to make this place better? I'm a firm believer that finance has a major, major role to play there. Finance can be a force for good, it can be a force for bad. And I think we all are here and we all understand the good that we can create with finance. It's a powerful mobilizer, a developer, and a huge driver. We also know there's a huge funding gap. I don't know the latest figures. I hope that by the end of today or the next few days, there's the new, the acronym NDCQs, I think what it's called. Those will be out soon, and I think those will highlight the funding gap that really is out there. But we know that it's huge. And today I'd like to speak to my panelists on what they see is happening in finance, happening in climate finance, what is working and what is innovative, what else we can do more. But to set the stage, the first speaker of today is the Managing Director of the European Stability Mechanism, ex-Finance Minister of Luxembourg, long-time diplomat, Mr. Pierre Gramegna. And I think one of the most memorable moments I remember of Pierre Gramegna is when I think we were in New York a long time ago. And you told me that you signed the Kyoto Protocol, I think, on behalf of the European Union, because Luxembourg had the presidency. But just to say that Pierre Gramegna has been involved in climate finance and climate in general since the very beginning. So he's going to give a quick keynote, and then we will ask our panelists to come on stage. Pierre, the floor is yours.
Well, thank you for your introduction, Robert, and thank you for giving me the opportunity to address the panel and the participants. It's a great pleasure and honor to be with you. Yes, I had the chance to be in Kyoto COP3 in 1997, and I was the spokesperson for the European Union because Luxembourg had the presidency of the European Union in that half year. Unforgettable moments. Now we're at COP29. It's my fifth participation in a COP, but it is the first time the European Stability Mechanism participates to the COP. So this is an innovation, and I'm really pleased about that. I'm going to finish my short presentation by saying a few words why this matters for us and what our contribution as an institution, which is the lender of last resort, is to climate change issues and to finance in climate change. Maybe a few points just from my side. The challenge of climate change in numbers. I think a couple of days ago it came out that this year we will for the first time have plus 1.5 degrees more compared to 1990, which is the maximum that we have agreed on in Kyoto, in fact, by 2050. So there's no room of maneuver left, basically. Bad news. The second one is the effects of climate change are becoming so obvious every day or every week. Think of Spain 2 weeks ago. The government had to announce a 15 billion special credit to help the people that suffered a lot because of these floods, and on top of everything 217 people died. We found another number that my team has collected, and that is that in the last 50 years the damages of climate change amount to 4.3 trillion euro, and that more than 2 million lives have been lost. So I think all these numbers put together tell us how urgent it is to act. We have a financing gap, as Robert Jarvis mentioned. You can measure it in many ways. A financing gap of helping the poorer countries to be sufficiently equipped to combat climate change. That's a discussion that's ongoing. Let me nevertheless say that what was agreed in Paris was that the developed countries would mobilize up to 100 billion every year for developing countries or emerging countries, and we have delivered. We have delivered. I mean, the community of countries has delivered. With 2 years delay, has delivered. And I can tell you, when that goal was agreed in Paris, nobody thought that this would be possible. So let's also let's not take it for granted that we will achieve the next step, but let's see that looking backwards, we have delivered, the countries have delivered on their promises. But the funding gap is also in what we do at home, and you know that the European Union is the leader in all of these initiatives, leader in how much money is being mobilized in public and in private sector for combating the CO2 emissions and reaching the goal of minus 55% of emissions by 2030 and then net zero by 2050. Now, in this COP29, I think there was already quite a few good news. Let me highlight one. As we're talking about funding gap, the multilateral development banks have announced 2 days ago that they would gear up what they mobilize in capital for climate change, and that they would reach 120 billion per year by the year 2030. Now put that in the perspective of the 100 billion that were mobilized, I mentioned before, in the Paris Agreement for the less advanced countries, then you see that the effort is considerable. And why is that particularly good news is because the multilateral development banks, they are there to crowd in the private sector. So when they put €1 down, they attract up to €7 of investment in the private sector. That's the number that the EIB mentioned a couple of days ago. So their role is key, not only in developing countries, also in our developed world. In fact, the EIB invests 85% of its resources every year inside the European Union. If I stick to the topic, which is innovative finance, I would like to mention 3 things that I think are key. One is a good news that was also announced here during these days, and that's the agreement on Article 6, on the new operational standards for global carbon market. To me, this is a very important step, and the negotiation took quite long because it will allow countries to offset their obligations with money and goals and investments, or by trading carbon. And I also think that that will allow many companies to be attracted in that field, in the area of combating climate change, in developing new technology. So that's the first good news I would like to highlight in the context of innovative finance. The second one is an idea that the ESM has developed. You might be aware that the damages caused by floodings and other terrible nature events, like typhoons and wind, whatever, are in fact causing huge damage that cannot be insured. Statistics show that only a third of the damages that occur are covered by insurance. And insurance companies are not ready to cover the other part because the cost is too high. So the idea that we have developed at ESM is the following. Why not create a kind of carbon pool which would benefit from contributions from private insurances themselves, and then you would create a backstop which could be public money. And that backstop could function in the same way as the ESM works as lender of last resort for the single resolution fund for banks. Because for banks, that's what we have done. We have collected over 10 years 80 billion euro, which are there now in case of crisis. And there's a backstop foreseen by the ESM of nearly the same amount, so doubling the amount of money available. So we think that we have an insurance gap which could be filled with such an initiative. Then last but not least, this afternoon I met here Bertrand Piccard, who explained to me that together with the European Investment Bank, they are thinking of making climate change technology available at a lower price by making sure that you can buy the service that the technology provides without having to buy the very expensive technology, to say it in a few simple words. All this gives me a lot of hope. So Europe is a pioneer in this, is leading the crowd like it did in Kyoto already. We know that China, I would like to underline that because it's not mentioned sufficiently, has committed to reach net zero by 2060. That's 10 years later, but nevertheless, they are committed. So they are now the largest emitter in the world. We know that the United States has committed to it when the Biden administration came back. We know that the new president is likely to exit again. But I think in the long path to net zero, this will be a parenthesis. And the reason why I say this, because we see in front of us that the issue is just obvious, and it's in the best interest of the whole planet that progress is made. Let me conclude by just telling you the mechanism of the ESM and why we are here. So we are there to help countries in case of a financial crisis at home, whatever the cause is. And so we have supported 5 countries in the last decade as a result of the sovereign debt crisis. So we help fortify the whole euro area. We safeguard the euro area. How do we do that? The 20 euro area country have paid into the ESM 80 billion euro. It is the highest paid in capital of any international financial institution. Why did the countries do that? Well, because they want to support the euro. They want to do whatever it takes to guarantee the safety of the euro area. And so we manage that, those 80 billion, and we do not spend them. The support to the countries that we have given, up to 300 billion, we do that with loans that we issue, and the market is very pleased to issue bonds at AAA rate for us because there is this paid-in capital of 80 billion. So the system is very original. No other area in the world has this. And we think that a similar system could work, as I mentioned before, for insurance, for the insurance gap. In the last years, we have subscribed to the principles of responsible investment. We participate to the NGFS, which is the network of the central banks on green finance. And we issue since 2 years a report, our ESG report. And I can tell you, the market players, and we have our CFO sitting here, Kalin Anef Janse, in the room, that he tells me the players in the market, they ask us for that. So let's not be too pessimistic that we're doing this for the gallery because it looks nice. The market is asking for it. Last but not least, on the ESM, since I have arrived, I have insisted a lot, and with the help of Kalin and his team, we are investing more and more in ESG bonds when we go on the markets to place our paid-in capital. So more than 5 billion of ours are in ESG bonds. In conclusion, so there's lots of good news out there, and I think this COP29 entails quite a lot of it. And to rebound on what Robert Jarvis said on the planet, I like the sentence that you used. There's another one that I like a lot, which is even more shocking, and it's this one, when people say there's no planet B. And then I say, well, yes, there's no planet B. But the result of not solving the climate issues is not that the planet will disappear. It's humankind. Thank you very much.
Thank you very much. If I could now ask the panelists to join us on stage. I think Pierre would also going to join us. Super. Thank you. Yes. Yes, Pierre is just here for the gender balance. That's Today is actually Pink Day at COP, I heard. I don't know if you are aware, it is Pink Day, which is highlighting the issues and especially to, I'm not saying to promote, but to raise awareness for violence against women. And it's something that is also very important actually in finance, in climate finance. But so Pierre's given us a great introductory remarks, and I would like to talk a little bit to our panelists, and in particular, I would like to start first with Nicoletta. I apologize to the other panelists. It's not following the structure that I sent out, but Nicoletta, Luxembourg is home to a major financial center. There's a lot of climate finance in Luxembourg. Could you give us an overview of what is happening in Luxembourg? How are we doing in sustainable finance, and what is the new things? What is coming up in finance that is exciting, and in climate finance in particular, that is exciting you and the LSFI?
Yeah, thank you very much for inviting me. So I'm the CEO of the Luxembourg Sustainable Finance Initiative. A few words on the initiative. It's the coordinating entity of all sustainable finance actors in Luxembourg. It's a public-private partnership funded by the Minister of Finance, the Minister of Climate, Biodiversity and Environment, Luxembourg for Finance, which is the development agency of the Financial Center in Luxembourg, and the High Council for Sustainable Development, which advises the government on sustainable development issue. Why I'm mentioning that? Because it's a great combination of public and private, and former Minister Gramegna was a key enabler there. Luxembourg's ecosystem is very lively, and I believe LSFI is a result of this lively ecosystem. A roadmap was established in 2018 with 10 recommendations, and where the first two were to draft and elaborate a strategy for sustainable finance in Luxembourg and create a coordinating entity. Luxembourg, you maybe don't know, since 2006 has a labeling agency, which now labels it. We have the CEO here in the audience, so you can ask many more questions. She is the expert here. But I think there are 12 labels that can, and started with microfinance. So Luxembourg is now hosting 50% of overall AUM within microfinance vehicles. 2016, Luxembourg set up the first and now world's leading Luxembourg Green Exchange that trades securities, sustainable securities, and as you know, we have green, sustainable, sustainability linked, and green bonds. Luxembourg launched in 2018, so by the time the Paris Agreement was signed, the International Climate Finance Accelerator. We have also here a representative in the audience, which is meant to support first-time fund manager. And now, this year, the International Social Climate Finance Accelerator has been established to support fund manager that wants to set up a fund to foster and address social challenges. So this is just to give an overview of key public-private partnership. Of course, Luxembourg is, for the one who doesn't know, the second largest hub for investment funds after the US. And by the results of LSFI study dated 2023, we are coming on the 5th of December with the latest results, but I cannot disclose them now. 67% of the funds domiciled in Luxembourg are ESG. This year, we will also showcase what is happening on the private asset side. And as you know, I mean, SFDR, the Sustainable Finance Disclosure Regulation, which is, of course, very relevant for all EU players and beyond. Most of the Article 8 and Article 9 funds are domiciled in Luxembourg, this on the private side. I'm for sure forgetting something, but I don't want to lose the time from the other panelists. Robert, I just gave you an overview on the public and the private side.
It's a perfect sales pitch of Luxembourg, and I appreciate it very much. And I often get shocked when I hear that Luxembourg's 50, 60% of ESG funds, you know, it sounds good on paper, but how green are these funds? We all know the scale of greenwashing or the exclusions, and then they call themselves ESG funds. So the real climate finance is actually, you know, much more impactful. And that brings me to Sarah and your organization. Could you just cover a little bit about what you see? Because I think that is the real impactful finance that you're trying to convene. So if you could give us an overview of what you're doing and what you are seeing, which is kind of new and exciting.
That's a great question, and part of my answer might be disappointing because it's a little bit less about what's brand new and about what we're not noticing. So I'm Sarah. I'm with Gary, the Global Adaptation Resilience Investment Working Group. We're a convener. We bring together investors, LPs, and GPs who are really interested in moving more funds into adaptation and resilience solutions. Last year, we did research with the MSCI Institute that developed the CRISP framework. And what they found was a lot of the public companies that don't necessarily call themselves climate adaptation, climate resilience, climate mitigation, are creating products and services that can and will have a meaningful impact in creating more adaptation and resilient solutions. So this is everything from HVAC systems, you can think kind of built environment, concrete, anything that you can even imagine we might need to build a more resilient world or a more resilient economy. There are companies in the public markets that are doing that. So part of my answer to your question is there's a lot of innovation happening in this space, and it's not being labeled that way. There's a lot of reasons for that, but I think it's important to know there's the greenwashing side, and then there's also the significant impact being done by companies that aren't even calling themselves that. Maybe they end up on some of these sustainable finance indexes or in some of these funds, but maybe they don't. So that's kind of one piece of it. On the other side, as far as the real impact, a lot of that's happening in the private markets. So we have a lot of private equity funds, venture capital funds as part of our working group. And organizations like the Lightsmith Group really have the opportunity to be very niche, to identify significant impact, to identify companies that are providing those solutions, those products and services. And what I think is really interesting about it is you've got this really wide span, again, from small private equity funds to public markets, and you can have significant impact at any scale. So when it comes to how do you get real impact, I think it's really important, and I really appreciated the comment about greenwashing, to not just look at how something is labeled, but to really look at what is the impact on the ground and what could be the impact of those products and services. Again, we focus specifically on adaptation and resilience within the climate space, and in order to adapt and create more resilient companies, economies, communities, it requires every type of finance, and it's going to hit every single sector. So we're really focusing on taking it from being this niche thing to what are we actually not noticing? Because this is something that's going to hit everyone, every region, and it's going to hit us all differently.
Thank you. And speaking of other types of finance, you're here representing the private sector. Obviously, what do you feel when you hear these kind of private sector involvement that we've been hearing throughout the whole few days of the COP? How do you react to that?
Thank you. Hi, everyone. My name is Anaïs Anglevent. Can you hear? Yeah. Okay. So I work at the Lightsmith Group, which is manages the first fund for private investment in climate adaptation and resilience companies. And the Lightsmith Group has a blended finance strategy in that it has different capital providers as well as concessional layers of funding. But what makes it really unique is that it has an aligned technical assistance facility, for which I'm the program manager. The main objective of the technical assistance facility is to accelerate the deployment and transfer of Lightsmith's portfolio companies into lower income countries, small island developing states, and among vulnerable populations. So really taking these very crucial technologies and bringing them to where they are the most needed. And so I think what Sarah's saying is very relevant. We're seeing that in most places, these companies are not labeling themselves as climate resilience anything, but that these populations are really in need of these technologies. And so I can give an example, for example, of one of our portfolio companies that we invested in is Source Global, which manufactures and deploys these hydro panels, essentially pulling water vapor out of the air and using only solar power, transforming it into clean, drinkable water. And what we did through the TA facility is deploying these hydro panels in small island developing states, Papua New Guinea, Tonga, and Vanuatu, in really remote communities that are dependent on boated water, on trucked water. The first pilot we did was in Papua New Guinea where, we deployed the technology at a school and in a peninsula that really relied on bottled water and water harvesting. And the school, if the school did not receive water, the kids could not go to school. And so through these panels, which have a 15-year life cycle, we were able to provide water to these communities for long term. And through this, we also tested different business models and were able to deploy the technologies in 2 additional countries, Tonga and Vanuatu. As a result of that, able to really test out different business models. So for example, we found out that in the Papua New Guinea, in one of the pilot sites that we tested, it was less easy to negotiate side by side instead of working directly with government entities. And so in Tonga and Vanuatu, we really are partnering with, in one case, water utility, and the other case, another school. And actually through the Papua New Guinea pilot, this company Source Global is now drafted an MOU to explore a partnership to deploy their technology across 750 schools for 200 that would reach 240,000 students. So that's just one example.
Thank you. And I realize now as well that sitting both of you next to each other with Anaïs and Agnès is a very, your names are actually very similar, because my question was actually for Agnès, but thank you very much. And it's even more interesting now to hear from Agnès from BNP Paribas. What is the big capitals kind of reaction to this really kind of project, really, really impactful finance? What do you do and how do you see the market going?
Yeah, maybe. Yeah, we like to make it a bit challenging. So maybe to take a step back quickly, and you were giving some figures. When you look at the broader sustainable finance world, it gives big volumes and big numbers. So this year the anticipation is over 1 trillion that will be in label bond market, or just
Hold the mic
just
like
under.
hold it
Oh,
more like this.
Really?
I think so.
Is it better now? Oh yeah. Okay. So sustainable bond market should be around 1 trillion this year, but when you look under the hood, really, that's mostly going to developing countries, to really, your large corporates, your actually mostly developed sovereigns. Of course, you will have the part of the development banks that will issue, and that's pretty much it, yeah? So as part of, what we do on our desk at BNP Paribas, we really focus on stable finance label debt. So it's interesting to call it that way, but the traditional products, there'll be your green bond, your social bond, sustainability-linked bond being a bit more recent, but they all have that feature that they are not well suited to this type of project, that probably are the one that will deliver more impact. And we also see that the ICMA, so the International Capital Markets Association principles, and I've been vice chair for the last couple of years, and we always ask ourselves the question, why don't we have more emerging markets issuers coming to the green bond market, for example, because that's a way to also see how much green finance is going to emerging and developing markets. And of course, we look from our small window and at the principles, and we tend to think that, okay, maybe that's because, there is something that's not working in the principles for emerging markets. I look at it more from a financier perspective, and I think fundamentally it's the risk that are beyond, the green bond market. It's really, country risk, currency risk, that are the blocking point for getting more finance channel effectively to those countries. So what we've been focusing more over the last, I would say, 12 to 18 months is how do we bring blended finance, but of course we've been doing it as a commercial lender already for a long time, but how do we bring some of those technologies effectively to get institutional investors to also take part? So what you were describing at project, they are really impressive, and it's really impressive that we are investors such as yourself that manage to do them. But if we want to get large asset managers, large asset owner to do those investments, they cannot take the same risk profile. And this is how do we leverage on some of the grants, some of the first loss pieces. So there are a few interesting types of transactions these days. I mean, debt swap, they are kind of, a bit better known today, I would say. But when you look at what the World Bank has been issuing, they call them outcome bonds, some others will call them impact bond, they are quite useful to also deliver financing to this type of project, as you were highlighting. But it all relies on, and that's where for us the MDB reform is very important, but also foundation that can complement, with grants. But there is a big gap, you were referring to all, the public side say we need more private, the private says we need more public. And somehow people don't quite understand each other. And I think the reality is not, we don't have at scale what is really required. When we say we need more of the public funds or the MDBs involved, we mean taking first loss, having lower interest rates, really coming in so that institutional investors can actually put that in their large fund and not in what will remain kind of niche funding otherwise.
Thank you very much. That actually brings me to what I do. At the ministry, I do predominantly blended finance. And this, I think, is one of the crucial areas of how we can actually make a difference, is connecting. And one of the issues I find is that, like you say, the public want more private and the private want more public, and it's a difficulty in matching them together. We've tried, and we're trying to set up various platforms, but I don't want to talk about myself. I want to get Pierre's opinion on this and what the kind of European institutions, the MDBs, how they can help connect this capital and generate more impact with finance.
What strikes me in what we're describing here, we are, and rightly so, we are describing a part of the issue, which is how can we finance projects that are conducive to reducing emissions in countries that lack means or accompanying companies in such countries. So I think this is one angle of the whole issue. This COP is dedicated to how to green finance, and I would like to at least highlight, this is not the topic you have talked about, highlight that what we need to achieve is that the banking sector, to make it simple, the banking sector and the funds are encouraged just by the regulation to invest in ESG products. So it must not be a kind of developing project. It should be financial instruments that are there, that are just bought by the market per se. So, I know that central banks are working on this. The second, so how to encourage banks to do that, also through regulation, but not only through that. The second thing is, I think the technology that allows us to achieve the goal, some of the technology is already there, and some of the technology is not yet there. And there we have a chicken and egg question that was mentioned by, I'm not sure it is Agnès or Annick, but this is tricky because see what happened with solar panels. Solar panels today are extremely cheap. Now, obviously, it's the Chinese who managed to do that at large scale. But now this technology is available very cheaply. And what does it mean? It means for Europe that renewable energy through wind and sun is the cheapest energy that we can produce. So it's also an economic approach that we must have. So I'm saying quite clearly, going for green bonds or green investments must be economically attractive. As long as it only works because there is someone who takes the tail risk, then we will not have the whole sector really roll out all its power to achieve the goals. So I know it's two different topics, but I think it is key to understand that.
Thank you. And anyone that wants to react to that, please feel free. But another point that I wanted to mention, when I listen to that answer, is there are the economic reasons, but then there's also the social impact. And we have to work on climate finance. And there's also the what I believe is a good combination of climate and just. Nicoletta, perhaps, do you have any examples of this?
Well, talking again about Luxembourg, I'm very much related to social issue. Luxembourg is and wants to continue being. Sorry, it seems so close already, but it's not. They always say eat the ice cream. So Luxembourg is and wants to continue being a key center for gender finance, which you may say, is it social? For me, it's at the basis. So we need to achieve gender balance as a foundation, as like complying with the regulations, for two main reasons. We are hosted also by the EIB Benelux Pavilion. EIB, as the European Investment Bank, has issued several gender balance would foster climate action. There are many psychological reasons, I believe, and in the space of sustainable finance, you normally find a lot of women, but women are probably more committed, apart from example like Pierre, who is a fantastic sponsor for the cause, to achieve climate goals and really embed this cause. But also, on the other side of the angle, especially in developing countries, women are the ones that will and are suffering the most for several reasons. I invite you to read many of those reports that are available out there. On the social, I would like to take just a couple of points. For me, again, it's extremely important that whenever we touch upon so-called environmental issue, take climate, take biodiversity, we always address them with an holistic approach. The LSFI is updating its strategy, identifying key topics for the future. And for example, when it comes even to biodiversity, biodiversity is not just linked to natural loss, but is linked to community displacement, indigenous people. So whenever I know it's complex, and we are asking to go even beyond the challenge, but we always need to try to embrace with a 360-degree approach all these single topics, and that's why social issues have to be integrated within the environmental issues, so to say.
Thank you very much, Sarah. I see you nodding your heads all the time, and I'd be curious to hear, in your really kind of more other side of the pond perspective, perhaps, does that resonate also with you?
It does, and I'm glad that you link those together. I think that there is one common sort of way of speaking or way of thinking about this is that both gender, for example, social generally, but gender is a great example, and climate adaptation are both a lens at which we can look at basically every sector. So you can certainly do projects, maybe even investments that specifically benefit women and girls, but you also need to look at how every investment that you're doing is benefiting women and girls. Are you providing loans through a bank, and what percentage of the borrowers are women? Similarly, if you're providing loans through a bank, how are those borrowers thinking about the adaptation and resilience of their businesses? So I think that the link there is something that can feel really complicated to process, but might actually be really simple to implement, which is if we just start thinking about, we need to think about how we are becoming more resilient to climate change, and we also need to think about how gender affects our businesses, how we are ensuring that there's gender balance in our businesses and our portfolios, et cetera. It can really apply to everything. And so I'm glad that you linked those two things, because on the one hand, women and girls are experiencing the most negative impacts from climate change, and there's an opportunity to just be thinking about it in every type of investment that we do, instead of pulling it out as an exclusion and just benefiting from a specific type of finance. And so thinking about these things, again, as lenses instead of, say, sectors is a real opportunity for any type of finance and any type of investor.
Thank you. Yeah, I myself, I did a lot of research on this as well, as a strategy for our ministry, what we can do in the gender finance space. And there's statistics that are out there that women, not led, but companies that include women and diverse boards make better decisions. They make more profitable decisions, and they emit less CO2. And it's that simple. It's to include more diverse people on the decision-making bodies. And Agnès from BNP, I was wondering, does that work in your world as well? Is that true?
So obviously we do work on social bond. Actually, as you were discussing Luxembourg, couple of months ago, we arranged, which was the first for sovereign private placement that was specifically focused for gender diversity spending from Iceland.
And is there a climate angle as well?
Not on this one. So this one is really gender diversity measures, but actually, and just more broadly, and it's true of adaptation, it's true of social generally. The way, probably as investors and at the market, one way at least to get better focus on most green bonds, indeed, when you get the reporting, you could get issuers. That's an extra element you would ask of them, but the UK has been pioneering that. But you could ask them to show their social co-benefit, and you could do the same with adaptation. The French green bond does that quite well. It shows actually that eventually, when you look at the adaptation objective, is 20%. So social is the same, and I would say. But when you look at the social topics, gender, at least in the stable bond market and stable loan market, does a better address. There are easier metrics to look at. Yeah? Another element on the social and just transition, it depends how you define just transition, but if you want to look at the impact on the workforce of changing business model, that's going to be hugely complex for a private corporation. And so very often on the corporate side, they are a bit hesitant of how should they look at just transition, because if you ask them to close certain plants, for example, well, that's a climate angle, so they can retrain, but there are limitations as to what they can do, and they tend to push that more to the government side. I have one question maybe for Pierre, actually, on your earlier elements on the regulation front, and having been in the stable finance market for some time where there was no regulation, and now we have quite a few. I do find that even though you will have lots of people moaning that they are cumbersome, they are expensive, they are imperfect, I think they help. But the next level, if we really want more investment going to ESG, disclosure is good because that's creates competition. Yeah, everybody will, if that matters for the end investors, but you will show actually what the funds are doing, and so the investor will start questioning. But a lot of the time, it's still investors will say we have a fiduciary duty in terms of return. So if we can have incentives that provide better returns for an ESG fund, suddenly you'll have much better demand for ESG funds. And my understanding of the whole EU landscape in terms of regulation was to say, okay, for example, we do taxonomies or we do classification for funds, because then it's easier to target incentives measure, whether it's better tax regimes, but we don't see obviously that second leg happening. We see the setup of the regulation. So now the regulators, the countries have everything at hand if they wanted to provide incentives. Yeah, they can direct to some projects that follow the EU taxonomy. They can target Article 9 funds or the new SFDR, but that's obviously, I guess, challenging from a political perspective to say suddenly we are going to spend in terms of incentivizing investments.
When you're talking about taxation, you mean taxation of investment funds?
Yeah, for example, better
in Luxembourg
tax
in
rate.
particular or in general?
In general, in Europe, yeah. I think Luxembourg had tested that, no? I think it's...
Well, I'm not so sure that taxation of investment funds, be it in Luxembourg and others, can be such an incentive, but I'm glad to be educated on it. I thought you would come a little bit from another angle, because what I've heard in the last couple of months a lot is that, yes, Europe is good at creating a framework, for example, through taxonomy, and in fact the ESM itself was an observer in the taxonomy group. Julie Becker was an observer for the Luxembourg Stock Exchange or Luxembourg Green Exchange. So we follow that very closely in Luxembourg. We follow that also at the ESM. What I hear more and more is the following. Number one is our Anglo-Saxon friends, and even I think business people and financial people in Europe say we're good at setting up regulatory framework, and the others are good at earning money. So our regulatory burden has become so large, so wide, and I take the taxonomy, it's really seen as too complicated. So I hear now more and more comments. And that's also a cost. So I wonder if that's not more of a cost than the tax issue, but question mark, I don't have the answer. So we definitely should look into Europe also to work more on guidelines and guiding principles. We organized a seminar on artificial intelligence at ESM last week. And I found out, I didn't know, that the OECD has established guiding principles on artificial intelligence. Now, OECD is all the developed countries. And I then asked, now, if the OECD has already elaborated it, how does then the new framework that the EU has established on artificial intelligence look like compared to the guiding principles? Answer of that expert from the OECD, very smart man, said, well, basically, Europe has taken on board all these principles and has added a few other things. So we continue to add layers of regulation with a good intention. But then in the end, it becomes sometimes too complicated to do business. So glad to discuss this issue of taxation. But I really think that we could leverage better in Europe the advantage that we have, that one, when we have regulation, it applies to the whole single market. So that's really an advantage. Second, make it in such a way that it is not so complicated, because the Article 9, Article 8 and Article, this 5 or 6, I don't know, there's a third one, it's 6. I'm not dealing with this every day. And I'm told that sometimes experts don't know which one to choose. So this is not really conducive to promoting such funds Nevertheless, we see that Luxembourg is performing reasonably well. But coming back to my very first point, and then I stop here because I'm too long, because we need to get at a level where such investment funds become the norm, and that we have exclusion lists that are internationally accepted, that banks themselves grade their balance sheets. I mean, you're from BNP, and I'm sure you have done that. You look at your balance sheet and you see how much is my footprint in terms of CO2. I heard from a bank today here at the conference who said we have 1% of our customers that make up 80% of our emissions, and it's a big American bank. Then you might say to yourself, oh, you know what? Maybe that 1% of customers, they might be quite big customers. Well, slowly, I don't want to finance them anymore because my footprint in terms of CO2 emissions becomes too high. That's what I meant by having all the players be really conscious of it and push the market in the right direction.
Yeah, maybe, but the only thing, and that's true of investors as well as banks, it's all voluntary today. Yeah? So, for example, BNP Paribas was one of the signatory members of the Net Zero Banking Alliance, but as we know, some investors. You have the same on the investor side. In asset manager, asset owners, some have already retracted. Luckily, it hasn't been an exodus, but those that want can. And same on the bank side, a lot of the mostly US banks. So it all remains voluntary, and as long as there is pressure in the system to follow it, then it works. But as soon as pressure drops down a little bit, what is voluntary is fragile, effectively. Yeah? So.
Thank you, absolutely. And the voluntary bit or mandatory bit, I think I had a good discussion yesterday. There are a few countries where there is mandatory such disclosures. I think New Zealand was the first, but then you're quickly into the politics involved and election cycles. And, if you mandate something like that, you're quickly into very, very kind of unpopular decisions. We've got just under 10 minutes left. And I think one of the things that you also mentioned, Agnes, is this. I think you refer to it as outcome-based payments, and that's something that I've seen that is very, very innovative. And I won't lie, we at the ministry, what we try to do is we try to be innovative. We try to do something, test the market, and if it works, hopefully other people will get involved, or we copy it, but we try to kind of grow it to kind of make finance more sustainable, mainstream things. Another thing that I hear a lot of criticism on the European regulation. And I read a few days ago a nice quote that, yes, we were the first mover advantage, but then you can also become the first loser advantage because of the over-regulation and the issues that causes, and people will choose other jurisdictions to structure their products for known reasons. But given that we just have a few minutes left, I wanted to pick your brains on what you see that is really, really innovative. And Anaïs, with the S.
Thank you.
What do you see? And we really have a few minutes left. Okay. Just to pick your brain, what do you see that you've heard of, that you think that is exciting, that you're looking for partners, perhaps with the ministry, perhaps with people in the room, or perhaps people next to you?
Sure, thank you. Well, first I wanted to address one point I think we touched on earlier, which is, or I've also heard people discussing here, is grant-funded mechanisms aren't sustainable and don't last very long, and grantees just look for grant after grant after grant. And I think something that's very innovative at the Lightsmith Group is that the TA facility is set up as a separate governance structure, but it is aligned with the fund. And so we are working hand in hand with the investment team to ensure that under that umbrella of deploying and transferring the technology in places that are that need it the most, to populations that are most vulnerable, we're really ensuring that we're fueling the company's strategic goals while also increasing their climate resilience impact. And so one example I can give is a new project that we're very excited to have launched this year, which is a project in collaboration with another portfolio company called Way Cool Foods, which is based in India, but is a food and agricultural supply chain company, and really reducing the food loss and reducing the amount of fragmentation within the supply chain. And we started with a pilot in India where we deployed climate resilience technologies to smallholder farmers, including IoT weather stations, pest detection tools, And so from those learnings, we're now transferring the technology to Kenya. So it's a great example of a south-to-south technology and innovation transfer from technologies that are known and have been developed by people who are most in need, and then transferring it to another set of population who are facing the same impacts. And I think a place where we could really increase collaboration is mobilizing financial capital providers from the start of a project to ensure that the sustainability is reached post project, while also in keeping with the company's strategic goals.
Thank you. That is a very good example. Sarah, same question to you. What can you do more? Or what is exciting you that we can perhaps partner with, or with people here in the room?
So I've got two things. One is a small one, because I heard it referenced earlier, which is the number of funds in Luxembourg that are focused on microfinance. So something that I learned just a couple of months ago is that there's a ton of opportunity specifically in existing microfinance organizations, or funding those microfinance organizations to have a significant impact in climate because of the amount of data that microfinance institutions have on their borrowers. So data is really important in this field, and microfinance does more than just help grow businesses. It also provides a suite of potential customers for climate solutions, and it's a great platform for incentivizing those customers to become more resilient themselves. So that's the one quick piece. And the second piece that I actually think, and I won't go into it too much, but really hits on this question about regulation. Obviously, sitting in the US, things are just very different. And going into a new political administration, a new political environment, we're very aware of how language matters and how labeling matters. And I think that there's a significant opportunity here to think about the language we use, especially in blended finance, about crowding in. We can use that in the application of climate as well, when we say what are real solutions to real problems, and we don't necessarily have to label them, but actually make more of an impact. And obviously that's a very US focus, but of course our investors are going to be impacted by lack or implementation of different regulations. And I think it's just an interesting balance to try to figure out where do regulations create more transparency, and that can be really important, and where do investors maybe opt out because they actually want to make the impact, but they don't want the scrutiny. And that's something that we're really interested in.
That is really interesting, and I don't love the American approach, but what I really appreciate, despite the lack of regulations, the US, if you look statistically, is still the one, or the private sector companies in the US are still the largest climate financiers there are in the world. The biggest private equity players, those can have a real big impact, higher than perhaps a listed equity fund, and those are mostly based in the US. Nicoletta, any final words before I wrap it up?
Yeah, I mean, I would stress on the future trends, and I think the thing where we need to focus. I could talk for hours, but I would say 3 words: innovation, science, and collaboration, among the many others. And on innovation, thank you, Sarah, for bringing up the data, because data challenge is always mentioned. But now we have solutions that are being developed to help financial institutions address challenges in reporting and data gathering. I strongly believe there is plenty of data out there, not maybe so much in developing countries, but we need to try to be able to use technology to process them fast. Then we need science and scientists to support the challenges we have. And the LSFI, for example, has just created a scientific advisory board to help us tackle critical topics that scientists know, but maybe they have, their complex language, and we need to try to bridge these two, let's say, expertise. And last but not least, collaboration. We are all here together, expert in different topics, and if we constantly keep a dialogue open, we can leverage on each other's expertise and try to be faster, because that's what we need. I could talk of several other issues, but I will stop here.
Thank you very much. The final point I think that you missed actually there, what we still need, is the youth. And I'd like to acknowledge we have a couple of students here, and it's actually really encouraging to see that students come to the COP. Students have launched some kind of impact investing advisory thing. We've got, the messaging from the kids of school. I am really optimistic that at least that will bring a big wave of change alongside some of the challenges that we've mentioned. Ladies and gentlemen, this has been a really fascinating hour. I hope that some of you will join us at the drinks at the Hilton in an hour. Nicoletta, don't hurt me if everyone shows up now. There should be enough space, but it's been a pleasure. I'd like to thank my panelists very, very much, and hope that we can increase the collaboration and make more climate finance happen. Thank you very much. Picture, please.